Of course, if we do go back to our story then with regards to South Africa's growth picture, 51% decline and contraction then in South Africa's economy. It is the worst figure on record, at the very least since 1960, at bare minimum then as well. Geoff Nolting is an economist at FNB, and he joins us as well. Geoff, it's a good afternoon to you. The numbers probably unsurprising, but what does this really say then about the stimulus measures that were put in place by government? Do we need to give those a little more time, or should they have helped things along a little bit here?
Hi, Arab. Good to be with you. Obviously, these stimulus measures are taking a while to kick in, and I think the GDP number is more reflective of the deep lockdown regulations. It's obviously extending SA's technical recession to 4 consecutive quarters of negative growth. And this one being the deepest, I think, since we have on data.
Yeah. Where to from here then for South Africa's growth picture? I mean, what do we look towards? Yes, we may get a bump up, things may recover somewhat, but it won't be enough that we don't have structural reforms in place to aid South Africa's growth beyond this picture.
Yeah, as you certainly mentioned there, we anticipate the second half of the year to record obviously positive sequential growth, and that's obviously due to the low base in the second quarter that we've received now. But this still affirms our view that the economy will likely decline by 8% this year in 2020. And while we're encouraged by the various infrastructure drives as part of a broader post-COVID-19 economic recovery plan, this only remains an upside to our longer-term growth forecast horizon. In fact, we only project about 3% growth in 2021. And what that means in economic terms is that takes us back to only 2013 economic output, which means we essentially have lost about 8 years of capacity and output.
Good grief. Losing that much also means that job losses are bound to abound as well. Then do you expect that figure to incline, and by how much?
Yes, well, we're certainly awaiting Statusa's quarterly labour force survey. It's been delayed, but we've seen with the data that just over 3 million people have claimed UIF payments. And of those 3 million, we expect about over 1 million of those people to have lost their jobs permanently. And with such a lackluster economic growth forecast in the preceding years of 2021, we don't expect the labour market to recover markedly, particularly without significant structural reforms, as you mentioned. So certainly
poverty levels also bound to. Yeah. Apologies there. So poverty levels themselves also bound to increase quite rapidly. Is there a way for South Africa to perhaps mitigate these effects in any particular way from here on, starting from now? Of course, we've gotten over the ratings agencies. We know things are negative. It's now just about doing the hard grafting. What is the hard graft, you reckon, at this point?
Well, at this point, and as economists say, is the cheapest form of stimulus is confidence. So we need to boost business, investor, and consumer confidence. I think in terms of boosting investor and business confidence, certainly removing a lot of bureaucracy and red tape, making it easier for people to do business, as well as cleaning up with, in terms of investor confidence, is I think the government showing that they're going to cut down on consumption and increase investment. And obviously with the increased government investment comes more infrastructure, and more infrastructure becomes more long-term sustainable growth within South Africa.
What's the quarter-on-quarter projections for growth then, maybe for the third quarter and even the fourth? And I only ask that because, of course, yes, we're in level 2 of the lockdown at this point in time, but production has begun to ramp up, of course, and perhaps not as much as it was before, but will this be enough to get us into some sort of positive territory?
So it depends how you define positive territory. After such a huge contraction this quarter, as you said, 51%, we're anticipating slightly less than that in the next positive in the third quarter. So we're anticipating about a 45% increase in quarter-on-quarter growth. And then that sort of subdues going into the longer horizon of our forecast. So essentially what we have is a huge drop in the second quarter, and then economic recovery in level terms recovering, but certainly well below pre-pandemic levels.
Yeah. Agriculture did manage to rise, though. Do you see that figure continuing to climb and be the mainstay of South Africa's economy for the year at the very least?
Yes, so agriculture being the only sector that recorded positive growth this year, and certainly the only darling in terms of sort of the short to medium term. The sector benefiting certainly from favorable rainfall, as well as increased production in animal products, field crops and horticulture. And I think when we look at a little bit closer at our internal data, we saw that the citrus industry has certainly benefited, particularly from the perceived consumption of vitamin C, and we've seen quite a larger proportion and a sequential increase in citrus exports from South Africa.
Yeah. Geoff, appreciate the time. Thank you so much for it. Geoff Nolting is FNB's economist, joining us there via video link, giving us an update on those numbers. Horrendous numbers indeed there when it comes to the GDP figure for South Africa, 51%. It's interesting to note construction, mining, manufacturing, all going down more than 70%, 7-0. And that's how big a contraction this is. Only agriculture going up 15%. Government services managing to lose only 0.6%, if losing 0.6% is even positive in this sense. All right, that is where we leave things for now. We're going to go to a short ad break, back right after this with some more international news.